Welcome back. You're still with us on Countdown on Bloomberg Quint Live. Just quickly pull up what the European markets are doing and what the turnover is at the current point of time in Indian markets. So firstly, the global markets, well, a bit tepid in the session today. No great support from that space. Had it not been for Infosys, frankly, we would have been in the red any which ways. And the volumes in today's session, let's see if they are as slow as they have been for the last few days. Yes, NSE cash about 20,000 crores, which means there will be sub 30,000 crores. No great change seen out there. So that number too will be subpar, sub what we've been used to. That is a number of over 30,000 crores. Okay, let's get in Sharad Dubey-Johnson with the list of the Fab 4 stocks of the day. In a market like this might not have been too difficult, but certainly not too easy either. Sharad, what's standing out for you?
Yes, there's no, like the first stock I've picked up is Infosys, where the stock went up almost as high as almost 7%. It's the best performer in the Nifty index, and also it has gained the most in 2 years. The results had come out post-market hours, and the company has increased its FY20 revenue growth guidance range from 7.5% to 9.5%. Apart from this, the next stock is Piramal Enterprise, which is up by almost 6.8% after the media have reported that there is going to be a deal in which SoftBank will try to infuse around 9,600 odd crore rupees. The details have not been actually put on the exchanges yet, so we'll be waiting out for that. The next stock is Apollo Hospitals, which is up almost 1.8% after a high open interest was seen and fresh longs was seen with open interest of almost 18%. And the last stock of the day we see is GTPL Hathway, which is almost high as up as 16% and gaining for the third straight session with volumes as high as 18 times its 20-day average.
Thanks a lot for that. Sharad, good having you. Let's get in Dharmesh Kant of India Nivesh Securities with us on the show, and then we'll of course get you one more set of chart checks with our experts too. Dharmesh, thanks so much for joining in. The small size banks are certainly in focus. RBL ahead of its numbers on Friday is down about 6%. DCB and Federal come out with numbers tomorrow. Which is the one that you're watching out for the most?
Yeah, good afternoon, Neeraj. I think I am looking forward to RBL numbers, and I think the stock price correction which has already been done would provide you a good entry point post the numbers are announced. So, I don't think anything as great a negative is there which would warrant further correction in RBL. The exposure to ILFS much has been provided for in the last quarter. What is the remaining should be provided for this quarter, and if any in DHFL is there, so that will come to know in the numbers. But apart from that, business as usual continues to be very robust for RBL. So that is what gives a comfort level for the entry point. But we'll do it post the numbers are announced. So DCB will continue on its usual course. There has been a deceleration in the growth of advances for DCB, and we expect the same to continue going forward as well. So nothing much out there. Valuation wise, it looks pretty expensive when compared to RBL.
Okay, that's the view coming in on these banks which will be in focus, and particularly for RBL Bank, where we've seen a lot of short positions being built up ahead of the numbers which are slated to come out on Friday. Hi Dharmesh, good afternoon to you. And Infosys clearly outperforming what the street was expecting, especially one parameter was where they revised the revenue guidance for FY20. Do you now think, when the stock is trading at its all-time high levels, that discount that it has to TCS will narrow in the coming days?
Yeah, good afternoon. See, Infosys may get a drift of 3-4 more percentage point from the current levels, but my take on Infosys is the declining margin trend and the fluctuating guidance which they give. So every 2 or 3 quarters the guidance has been revised upward or downward. There is no consistency on that, unlike which used to be the scenario 3 years back. 3 or 4 years back, they used to be very consistent on guidance and they used to deliver what they guided for. Now it's like you just don't know next quarter what kind of guidance is going to come. And 100 or 50 basis point more contraction in margin, the scene will completely change for Infosys. So the declining margin trend was also evident in the number of TCS. If you look at that, they were also not able to meet the upper end of the margin guidance or even the lower end of the guidance which they have guided for. So the margin has been tepid, and as for various international reports which are coming on the IT space, they have been clearly citing slowdown in the IT as far as US, North America spending is concerned. Europe anyways is not doing anything significant. So this will continue to be a problem area for both the IT companies. And mind you, this currency has been appreciating too fast. past. So INR appreciation will also hurt them 50-60 basis point on a quarterly basis. So this is what is happening as of now. So my own take is I would rather be buying TCS rather than Infosys, because they still have a further elbow room as far as margins are concerned. So to me, this gap will not narrow. In fact, a couple of quarters here on, it will again widen up in favor of TCS.
But that's exactly what the management is stating, right? They're saying that they are going to be looking at margins to pick up, from the upcoming quarters. They had that high employee cost, which was weighing down on margins. They had made those big ticket investments, which were one-off investments, but now that's going to take the back seat, and operational performance is going to take the front seat. So they have made that kind of commentary. Do you don't think that could actually pay off?
See, earlier also similar commentaries were being made by Infosys management, but it was never delivered. If you look at 10 years back, it was the margins which used to give a premium to Infosys, and but they were always considered themselves as a high ticket and high value products which they used to offer premium segment, and TCS was used to catching up, and that is where they have been hurt the most. That is where they lost the market share. Management has said but nothing has been detailed out from where this margin traction will come from. Which are the areas, which are the order wins which they have got, which will be high margin or margin accretive. So that was not that good. It was more of a general guidance which they have been guiding for. So I have my own fingers being crossed and my own. I don't think it's possible given the scenario in which the company is working. At best, what they can do is maintain what the margins which they are having as of now. But I strongly believe that they will have a margin contraction going forward as well.
Okay, at the moment, the management of Infosys has not cut down their margin guidance, at least for FY20. There was a dip which was seen in the first quarter. Okay, moving on to the chart of the day. Blame it on budget 2019 or an overall pullout from emerging markets. Foreign portfolio investors have withdrawn a substantially large chunk from Indian equities this month. Yash Upadhyay is here to put the numbers in perspective. Yash, over to you.
That's right, Navneet. So foreign outflows from Indian equities hit their highest mark in calendar year 2019. According to the data from NSDL website, what we've seen in the first 15 days is that the foreign investors have withdrawn close to 5,000 crore rupees, to be precise 4,950 crore rupees from the Indian equities in just the first 15 days of the month of July, which is the highest number that we've seen for this calendar year, and also marks or snaps the 5-month gaining streak of positive inflows into Indian equities from foreign investors. Now, mind you, the month is not over, but we are on track to close negative given the sort of outflows that we've seen following the change in the tax structure that was announced at the budget 2019. Now, earlier there used to be a 15% surcharge on individuals earning more than 1 crore rupees. However, with the new budget reforms, an additional 25% surcharge was levied on individuals earning between 2 to 5 crore rupees, taking it up to 30 and more than and to 37% for those earning more than 5 crore rupees. That took the total tax incidence for investors to up to 39% for the first category and 42.7% for the second category earning more than 5 crore rupees, which is one of the highest in the world. And now this is something that would impact FPIs. The government came out with a clarification asking them to do their business by incorporating them as a corporate entity other than the trust route that they usually follow, which would help them avoid paying this tax. But the sentiment has soured, as a result of which we have seen this big outflow. Subsequently, we've seen the markets come off significantly. In fact, on a month-to-date basis, the Nifty is down more than 2%, which is on track for its worst monthly return since October of last year. Back to you.
Okay, Yash, thanks a lot for bringing that update with regard to what the FPIs have been doing in the markets. In fact, for the last 9 trading sessions, we've seen a selling of over 3,000 crore coming from there. All right, shifting focus back to markets and addressing some stocks. Pulla Piramal Enterprises that has seen some gains in today's session. That stock's up about 7% almost at day's high. Let's quickly get a technical check on that from Brijesh before we move on to the dealing room check. Brijesh, on the charts 2084, will you take a bet on the long side here?
Sure. With increase in volume, Navneet, and with the higher lows formation, important moving average are be trading below. So this all thing sum up the bullishness for this stock. So if someone wants to go for a long side, I'll suggest keeping a stop loss of 1985 or say 1990. One can take a long side for a short term bet and play for the target of 2222. And if someone wants to go for a BTST sort of thing, then keeping a strict stop loss of 2040, play for the target of 2120 to 2130 level.
Okay, that's the technical check on Piramal Enterprises. By the way, it's back to those levels when they sold 10% stake in Shriram Transport. After that, the stock had fallen from those levels, and it's back to those levels of about over 2,000 rupees. But let's move on and tell you what the dealing rooms are recommending in today's session. And we've got Yatin as well as Darshan joining us with their channel checks. Good afternoon to both of you. Darshan, you go first.
Yeah, so one of the stocks that's been spoken about is RBL Bank. While you're seeing that the Nifty has managed to hold on, the Nifty Bank is down in trade. The RBL Bank on its part is down over 5.5% in trade. Some of the foreign funds are active sellers according to what dealers have indicated to us. The other counter that dealers are talking about, and that is Jubilant FoodWorks, that is actually flat in trade, but the general consensus is that they expect a weak set of numbers that will go in. You've seen the slowdown that's happened as far as consumption is concerned, and on the back of a higher base probably there could be weakness. And the other one again from the consumption space is Colgate, which is also down almost 1%. Some of the domestic funds are actively selling the counter. They anticipate that Colgate probably will report weak set of numbers this time around. But Yatin, what are you hearing?
Darshan, Piramal Enterprises, of course, Navneet was already addressing and talking about that stock, clearly on a tear, 7% up for that one at the day's high. And dealers do indicate that there is a lot of short covering seen in the counter at this point in time. More importantly, by the month end, we have the company which will be out for the annual general meeting. Probably some announcements expected there, and on the back of that speculation, a good amount of short covering and buying happening in as far as this NBFC name is concerned. Apart from Piramal Enterprises, IndusInd Bank and Kotak Bank feature in the dealing rooms list. IndusInd Bank, of course, the weakness continues. Dealers do recommend a sell today, buy tomorrow kind of a strategy. They do expect the weakness to continue for IndusInd Bank. However, on the contrary side, we have Kotak Bank, which is doing well in trade. Dealers expect 1550 levels as far as Kotak Bank is concerned on technical trends. So this is one stock wherein dealers remain positive on moving ahead as well.
Okay, Darshan and Yatin, thanks a lot for bringing that dealing room checks for us. And well, 10 minutes to go for markets to shut shop. Let's also get you some closing strategies coming from our technical experts. Brijesh, coming to you first. Any BTST or any STBT for tomorrow's trade?
I have two BTST. One is OFS. The trendline breakout has been witnesses. So stock is giving bullish signs. 33810 the stock has been quoting. So if someone wants to go for a long side, keeping a stop loss of 3340, one can look out to buy. Play for the target of 3460 to 3480. Even the target can be actually 3500. And another is Voltas. No doubt the stock had seen a correction, but on the shorter term time frame of the chart or hourly chart, the oscillator has come out from a oversold zone with higher lows formation, which is giving a sign of a reversal. So somewhere around 589 or say 587, the stock has been quoting, keeping a strict stop loss of 580. One can look out to buy this counter for the target of 600. Even the target can be extended to the level of 605.
Himen, your strategy?
BTST on Tech Mahindra, Navneet, we're at 679, so buy it at maybe a rupee or two lower, 677, stop loss 673, target 685.
Somebody who opened a short on RBL during the course of the day today, Himen, at slightly higher levels, would you take home the short?
Book.
Would you'd book losses, you book profits out here?
Yeah.
On the short position, where you expect a bounce?
Yeah, small one. 11 lakh volume on the last hour, Neeraj. Highest volume in the last 35 hours. So somebody's bought. So I'm looking at I'm not saying it's a tearaway recovery, but a bounce. So if you're short, I'd prefer to take profit.
Okay. Fair call. Well, that's something to watch out for in the session today. The other thing, from a trade perspective, for Himen, the life insurance plays, HDFC Life, SBI Life. Again, somebody who is long cash, would you recommend staying long? The charts look good.
I think so. Not too much of data in either, but whatever data I have seemed to suggest that this year, this will be a saving grace for a horrible market.
Dharmesh, are you long on any of the life insurance or general insurance players?
Yeah, on SBI Life we are long, even on SDFC. So life insurance companies, but these are very long-term time frame, long 5 to 7 years kind of investment longs are there, and this has nothing to do with trading activity or a 1 or 2 year kind of a perspective. So the scope is very big for the sector to open up in a big way for the private space, and penetration level is still too low. So based on that, we are long on life insurance stock.
We'll leave it at that, Dharmesh. Thanks much for taking the time out and being with us today. Really appreciate your time.
Thank you so much.
Well, so ICICI Prudential may not have done well, but the others have. So good going, really. The other thing, and something that we were talking about on the budget day, about how post the budget speech, 1 hour into the budget speech, some of the MNCs which had corrected with the fear of that public shareholding moving up, and then recouped some of the losses because people believe that what if there's a delisting that happens. Some of those plays are happening right now. So if I look at Oracle Financial, for example, it's up almost 3% at 3385. It's a decent move from those levels as well. So do watch out for those names. I think they're doing well. And like we said, amongst other stocks that have done very, very well for themselves, Piramal Enterprises at 2077 is packing a serious punch for itself. Brijesh, I don't know if you've already spoken about Piramal or no. Okay, you have. Heyman, can somebody initiate a fresh long at these levels, 2077?
We're just walking into a mini roadblock, Neeraj. So at 2077, I'd wait for a correction, though it doesn't look like stopping because we're 20 lakhs plus on volume front. So I'd wait for a small correction. If not, I'd stay away.
Okay. Credit Access Grameen is up about 6.5 at 520, doing well. And there's something happening within the SL Group stocks because Dish is up another 6%. These days, it's made a habit of moving higher and then consolidating and then moving higher further. I don't know if ZTV as well is doing as well. It must not be doing as well. Yeah, actually, it's in the red. But Dish TV is certainly packing a serious punch. Some really strong moves the last 2 or 3 sessions for Dish TV. So that's the one thing that you should watch out for sure.
Yeah, Neeraj, this was, I think, a month and a half back. There were some market murmurs of a deal brewing for Dish TV. At that time, I think it was trading somewhere closer to 36. In anticipation of that, the stock had moved up to 36. Nothing happened. Stock went down to about 27, 28. And I think probably, it could be some amount of information that's already in the market, whether or not with regards to a deal, considering that the deadline already to have some kind of a binding agreement for Z is also coming closer. So that's probably giving that additional nudge to the stock.
It's arguably has to be that. It's just that if this is indeed what the deal structure looks like, then you get a sense that something might be brewing in Dish, not necessarily in Z Entertainment. They've typically moved in tandem, Heyman, just that the last few days they haven't. Dish, Z. Would you trade either of them?
Both. We spoke about Dish, I think, last week, Neeraj, and had a buy call then, a high-risk buy call, keeping the history in mind, but yeah, maintain the buy call. About 34, I think we are gravitating towards 38 and 42. So we made a base, Neeraj, and volumes are spiking up. If you see the volumes in Dish TV, it's very funny, Neeraj. Over the last 6 months, you had the highest, if I'm not wrong, highest ever volumes in the history of Dish TV. 50 crores, 60 crores, 20 crores, 35 crores. I mean, it's obvious there is some bottom fishing, and it's not bottom, I think it's ocean fishing. So something is happening which at least the volume seems to suggest that. So I would be clearly positive. And Z, I think Z is ex-dividend today. That's why we've sort of cooled off a bit. But I think 4-5 weeks of a consolidation is turning positive on the weekly charts. I have a feeling we're going to play catch up soon.
Okay, since we're in the media space, pull up GTPL Hathway. Remember, the earnings for this one came out last week, and since then, last 2 sessions, it has been locked in upper circuit with 20% gains, and today it's up another 16%. So in last 3 days, the stocks moved higher by almost over 60%. Dharmesh, before we let you go, we've already thanked Dharmesh, but let me just quickly get a check on the charts for this one if somebody is already holding this one in the portfolio. Brijesh, what could be the upside? I understand the stocks already gained a lot, but if somebody wants to now book out from this position, what target on the upside would you suggest?
Now with GTPL Hathway?
Yes, GTPL Hathway.
See, right now its stock has been somewhere around 89.5. It's been quoting. So till stock trades above 82 or say 84, chances are that stock is heading for the level of 100 plus also. So if someone is looking, suppose someone has bought it at the lower levels, I'll say keeping a strict stop loss of 82.5 or say 84, hold on to your position, and 100 or 102 is a level where the resistance has been seen from the chart where one can look out to book their profit.
All right, let's start wrapping up the markets. So Jem and Steon, we'll take in closing thoughts from you. It's been an interesting day of trade because there has been no support from the Nifty Bank, yet we managed to close higher, courtesy Infosys, which is up 7%. This won't be the case tomorrow, so you got to keep that at the back of your mind. However, as I said, the Nifty Bank hasn't done well. The broader end of the spectrum, the market breadth has looked poor, and it's courtesy the performance of the mid-cap and the small-cap indices. We have the 2 mid-cap indices and the small-cap index, all of them down in the red. The Nifty 500 too would have looked okay in trade. But the large caps, and right up on the gainers list has to be Infosys. The principal reason why we are in the green, giving it some support, is Sun Pharma and the rest of the IT pack, because TCS and Tech Mahindra too are in the green after a number of days or weeks. We're seeing Maruti amongst the list of the top gainers. It's heartening to see that it's amongst the top 5 gainers, which is pretty interesting. Bajaj Finance gains a little, and some of the metal names, especially JSW Steel and Hindalco, gain a little bit. What's not done well? Indiabulls Housing Finance falls. IndusInd Bank 2.5% lower. Can't quite fathom the reasons, but for the continuation of Friday's issues about the 3 accounts. But the brokerage has been bullish. However, the stock corrects. Z corrects, Dish doesn't. Bharti corrects. Yes Bank, which has been slowly creeping its way up, is down in the session today, and Titan corrects a little bit in trade today as well. So a mixed bag of sorts. It's only Infosys which has really kept us afloat. But unfortunately, Infosys is present only in the large cap index, not in the mid caps and the small caps, and therefore they have corrected.
That's right, Neeraj. Underperformance seen from the broader markets today. And let me start off with a couple of gainers first. Spark went up owing to the upgrade that Sun Pharma received from Morgan Stanley, and you got Spark also moving higher. In fact, in the second half of the session, majority of the buying came in, and the stocks also closing with gains of about 18%. The other one is GTPL Hathway, which we just discussed with Brijesh. Remember, the earnings came out last week, and the counter has gained over 60% in last just 3 sessions. Last 2 sessions, it was locked in upper circuit of 20% each. DMart is the other one, reacting positively to its numbers. Good set of numbers, highest ever margins reported. In fact, the positive takeaway was even the gross margins for the quarter were up 50 basis points. And Piramal Enterprises, we've been discussing on the show, that had a good run up. In fact, it's back to those levels before they sold 10% stake in Shriram Transport. After that sell-off, there was some bit of correction seen in Piramal Enterprises stock as well, but it's back above the 2000 level. Dish TV, which has been inching higher in the last few trading sessions, saw gains in today's trade as well. In fact, that's closing at day's high with 9% gains. 33.8 could be the closing price. And Equitas was the other stock among the F&O counters, which gained almost 3%. And Ambuja in the second half of the session saw some buying interest today. Ambuja gaining about 2.5%. On the losing side, Dewan Housing posted its 4th quarter numbers, and the losses were higher even than the market cap of this company, 30% lower. For this one, Reliance Capital fell in the second half of the session. That was down almost 6 to 7%. RBL Bank, ahead of its earnings on July 19th this week, saw aggressive shorting on the futures side. The open interest surged quite significantly. Aurobindo Pharma is the other one, which saw some bit of sell-off, 3% lower here. And your PSU banking space was quite weak, so stocks like Bank of Baroda and Union Bank, both of them saw fresh shorts building up, 3% lower for BOB, and for Union Bank it was down almost 5% in trade. And lastly, you've also got Tata Elxsi, which was quite weak in today's trade. Tata Elxsi fell about 4%. Tabina.
All right, so the start was encouraging, but probably a little bit of a damn squib by the end of the trading session. Looking at what the indices have done from the broader market standpoint, it was a clear disappointment. While the Nifty was held high by what Infosys did, no support from the banks. 155 odd points shaved off there for the Nifty Bank. Contributors then, no points for guessing what stacks up right at the top, and that is Infosys. 49 points on the Nifty has been garnered by Infosys alone. So 50% of that 90-point bump up that you're seeing is only Infosys. TCS, Kotak Mahindra Bank adding another 18 odd points. On the losing side, ICICI Bank, IndusInd Bank continues to toil under some pressure, and an L&T which loses about 8 odd points.
Okay, that's about the Nifty contributors for today, but let's also see how the market breadth panned out for the entire listed universe on NSE, and of course it was in favor of the declines for majority of the session, though we opened when there were more advances, and it's clearly the ratio of about 1:2. Let's also check how the participation panned out and what was the turnover in the cash as well as the F&O market. F&O was just above the average that we see. 6.5 lakh is the average, and close to 8 lakh crore. But on the cash side, I think it's below what we usually see every day. 26,324 crores on NSE, and on BSE about 1660 crores.
All right, that's what you've got in terms of the market internals by close. Let's quickly get in some closing comments from both our technical experts, Hemant and Brijesh. I'll come to Brijesh first. Brijesh, as we step into trade tomorrow, what is the one crucial thing that you will be watching out for?
Devina, no doubt, due to the Infosys, we have seen Nifty sustaining above 11,550 or inching towards the level of 11,600. If we talk about Infosys, I am looking for another, say, 20-30 rupees upside. So somewhere around 805 to 810 is a resistance zone. So it would be very tough. So as if we compare with that thing with the or if we take a view from a IT stocks to, for a Nifty again, I am looking would not be able to surpass 11,650 mark. So that would be acting as a resistance, or major resistance lies 11,700. That's our downside has been concerned. 11,450 or say 11,470 is a support. So again, might be a day of a consolidation. But tomorrow I am expecting Bank Nifty would be performing for at least for 200 to 300 points. So 30,300 or 30,350 marks would be holding on, and on the higher side, Bank Nifty has a chance of touching 30,550 to 30,600 mark.
So bigger bounce expected in Nifty Bank tomorrow. Hemant, what would your take be?
Yeah, even I also think, Devina, that a ungainly, unseemly, meandering bounce is underway. So I don't think the market has too much of an upside, but individual stocks have some bounces left. So the Nifty is playing along. 11,650, 11,710 is what I think could happen in the next couple of trading sessions. Beyond that would be just the lottery. Otherwise, it's a short. The way I look at it, it's a chance to go short.
Okay. We leave it at that, gentlemen. Hemant as well as Brijesh, thank you both for joining us this afternoon on Countdown with your views. And with that, it is also the wrap of the show. From Neeraj, Navneet, myself, and the entire team that's put the show together. Thanks so much for watching. The market wrap comes up next.
How many places can you be at